Nigeria traders at Axis Bank say investors continue to take profit on their winnings as post-auction activities take center stage this week. Kolawole Komolafe, Treasury Team Member at Axis Bank, joins me now for market updates. Kolawole, thank you for joining us.
Yeah, hi, yes, sir. Thank you.
Before I do a weekly review, just let's start by you bringing us up to speed on trading so far today at both the bond and treasury markets.
Okay, thank you very much. So I'll start with the money market. So this week, the market liquidity opened in a credit of about 402 billion naira. But as of yesterday, that declined to about 14 billion naira. This is due to some major market events, such as the bonds auction on Monday, the NTB auction that happened on Wednesday, and also the settlement for the CBN intervention in the FX market. As you'd expect, the interbank rates, as the open repo and overnight rates, also increased. It opened the week at 16.71% and 17.5% respectively. By yesterday, that increased to 25.5% and 26.5% respectively. If I'll touch on the FX market, we've seen significant gains for the Naira this week. This is mostly due to the CBN intervention where they came into the NAFEM to sell. So we saw that the NAFEX and the NAFEM appreciated. For the NAFEX, opening the week, it opened at 1,574 Naira to the dollar, but by yesterday that appreciated to 1,498 Naira to the dollar. For the NAFEM also, it appreciated from 1,598 Naira to the dollar at the start of the week. By yesterday, it closed at 1,571. So to go to the fixed income market, we had a bond auction on Monday where 2.5 trillion naira was on offer. That's for the 2031 papers and 2031 papers and 2034 papers. So by yesterday, we saw that they've been relatively quiet trades. We presume this is because of the MPC meeting, which is to hold next week. So market players do not want to take firm position just to see what direction the CBN will take as it concerns interest rates. For the NCB auction, post the auction, there was an NCB auction on Wednesday where the DMO sold across the three standard maturities. So we've seen that the offers at 1,800 while the bids at 1,830. If you recall, at the auction, the stop rates closed at 17% for the 90-year paper, for the 90-day maturity, while for the 182-day maturity, it closed at 17.5, and on the 364-day paper, it closed at 19%. But post the auction, we've seen that the bids are we've seen bids at 18.30 and offers at 18%. So we are just seeing a relatively quiet market, particularly with regards to the bond auction, as market participants look towards the MPC meeting next week.
Well, speaking about the MPC meeting, I know that, like you said, market will be trading cautiously to see what stance the MPC take. But from what we've seen so far, we know that there will be further tightening. General consensus is that there might be a significant rate hike of between 300 basis points and even up to 550 basis points. But no, when one thinks about the short-term paper, the one-year Treasury bills are somewhere between 18 and 19%. How much more headroom? Because, excuse me, when you think about companies like, countries like Kenya and Zambia, where they have interest rates higher than inflation, I suppose that's what the MPC CBN will be aiming to achieve with an inflation target of 21%. Well, how much more headroom do these rates have? Can they go at between 18 and 19%? If we do have that jump in the interest rates, how much longer can we see this rate accelerate?
Okay, Esther, if I had a crystal ball at this point, that would be nice. But just like you said, market participants are expecting between 200 and up to 500 basis point increase in the MPR. We'll just watch and see what stance the CBN will take. But the general consensus is that there would be rate hike, particularly as we've mentioned, the CBN governor is looking at an inflation target of 21%. It printed at 29.9% per data released by the NBS, which came out last week. So would watch and see what the CBN would do, or by how much it would hike it. But whether there is going to be a rate hike, we definitely expect that to happen.
For the Treasury's auction last week, where we saw 1 trillion offered and sold, but a lower amount offered, I believe Wednesday this week, 265 billion or so. Correct me if I'm wrong, but obviously lower amount was raised there. But the whole point was, to attract more foreign portfolio inflows, more dollars, to put it in layman terms, to boost the reserves and also to stabilize the naira. What are your expectations in terms of how much more of this the CBN, how much longer the CBN can keep this up, and if it can, perhaps gain more momentum to get more dollars from this side of the market while it tries to also boost reserves from oil receipt sales?
Okay, yes, you're right. At the auction on Wednesday, there was 265 billion naira on offer. The DMO ended up selling 1 trillion naira. And you saw the stop rate closed at 19% for the 1-year paper. So so depending on what happens next week at the MPC, we might see that subsequent auctions, both for the bond auction and the NTB auction, we might see, we will definitely see that that rate hike play out in where stop rates would close. We did go higher. Maybe would watch and see. And yes, you have some foreign investors that are still on the sideline waiting to see if it could go higher, and then they would bring in their funds for carry trade transactions. So it's all dependent on what happens next week at the MPC to be able to give a sense of what magnitude of interest rate hike we would see, and then how that would filter down into the fixed income space.
And are you expecting more commercial papers to be issued this year by corporates to just help them meet their short-term operational costs, etc.? And what kind of rates are they seeing right now?
Okay, yes, so it wouldn't be out of place if we see companies still come out to issue CPs. We've seen increased appetite for that from last year, and we've still seen companies issue CPs. The base rate would obviously be what's happening in the Treasury bills and the bonds market, and then you would see that market or investors that would want to partake in the CP issuance would add a bit of spread, of course, for credit risk spread and liquidity risk premium, and then you would see that we expect that the rates will be higher than where the T-bills and bonds are currently being offered at.
All right, Kolawole, we'll leave it there. Thank you so much for bringing us up to speed. Appreciate your time on the show today.
Pleasure being here.
That was Kolawole Komolafe, Treasury Team Member at Access Bank.